Hey, Mark.
Hey Dwight, how are you?
I'm good.
Long time no see. You have a good holiday?
Yeah, I did. I
Okay,
did.
good, good. Um,
We we already have 115 people in right now. They're hearing us.
okay, you're gonna live stream. You're gonna do it on YouTube.
Oh yeah, it's on YouTube, ready to go.
Okay. What is that link?
I'm gonna put it in the chat.
Okay, hang on one second. I might just shoot. Okay, hang on a second. Give me a moment.
Well, we have about 3 minutes to go. I'll just put a timer and you can set yourself
Okay.
up.
Um, um, Dwight.
Yep.
Okay, so we still got a minute and a half.
Mm-hmm.
Okay. I just
Still got people coming in.
why can't Hello, everybody. Welcome to today's live event. I'll just give this a few minutes to allow everybody to check in. Um, give you a few seconds. We've got 190 participants thus far. Trust you can see my screen. So welcome to this 4-day live event. This is live. Very often I'm asked, is this a live deal? It is. So welcome to this live 4-day trade execution webinar series subtitled how to capitalize on monster moves in the markets. My name is Mark Shawson, the pattern trader. So I'd like to welcome a lot of you. There's 196 participants on here, and I think I need to give a special shout out to Prashant. So Prashant Rao is one of our participants today. Actually, Prashant, you could correct me, but I think you were one of our first members when we started the Pattern Trader in late 2016. Prashant was our first member. He's on today, and Prashant was kind enough to send me this gift set over the holidays. This, hand engraved pen set of these cross pens. Now, I'm not trying to intimate that you guys send me gifts, but I just want to give a special thank you to Prashant for that. It was very unnecessary. Prashant said he made 650% off my trades last year. So, glad to be of some assistance to you guys. So Prashant says, yes, I've been following you since late 2015 and been with the Pattern Trader since 2016, Prashant says in the chat box. So that is awesome. And thanks again. So there's many people here who have been with us for a long time, but there's 214 participants, now 15. And like to welcome, anybody that hasn't, seen what we do. So for those that, are the first time on, first time meeting me, I'll just give you a brief background. I started my career when I was about a sophomore in college, junior in college. I was about 18, 19 years old, many more decades than I care to remember by now. And, I was at the University of Southern California Business School, one of the best business schools in the country, taking finance course, taking investment courses. One of my favorite teachers was a guy named Ken Treffs. He was an old guy at the time. He only took $1 for the school because he was a self-made millionaire. And really, I think that was the only class that I learned anything. But frankly, everything that I learned in there, I don't apply today, because it was really, with Ken and investment analysis at that time, what you were being taught in college was to break apart an investment based on what we call fundamental analysis. When you look at all of the fundamentals that drive an investment, in the stock market, that would be a price earnings ratio, inventory, turnover. You'd look at the management, you'd look at balance sheets and try and derive, an investment thesis based on, all of this information. And right around that same time, my father was doing business with an investment banker. My dad was one of the founders of Lion Country Safari. It's a drive-through animal park. I live in Florida. They actually still have one here. And my dad was doing one in Southern California at the time. And he met this investment banker by the name of Graham Loving. You couldn't really make that name up. Graham was a very eccentric guy. He had an eye patch over one eye. And by day, he was a number cruncher and an investment banker. But on the side, Graham was actively trading the commodities futures markets. Anything from orange juice to cattle to live hogs to soybeans to soybean meal to you name it. All these exotic treasury bills, stock indexes, about 30 different markets at one time, all of which were leveraged, all of which were moving very, very quickly, pork bellies. And it wasn't just, the amount of money Graham was making, but, it was how he did it. So you have to remember, this was in the late 70s. This was really the first time that rampant inflation hit the markets. And, we're talking about inflation now, and we're looking at, the highest inflation in 40 years right now, about 7%. But at that time, it was north of double digits. It was the first time interest rates went to 21%. And it was the first time gold went to $1,000, silver went to $50, pork bellies were running, soybeans were running. And around 1978, 1979, my dad threw in 50,000, Graham put in 450,000. They started this account. And a year later, that $500,000 account was $5 million. Now that's in 1979. So that's pretty impressive. And so kind of alerted me. I was kind of, fumbling around to decide what I was going to do with my life, what I wanted to do with my career. And, watching how Graham traded and what he did really opened my eyes. So again, it really wasn't the phenomenal amounts of money that Graham was making, but it was how he was doing it. And it was so disparate from what I was being taught, in the best business schools. Graham basically bought a piece of graph paper. Remember, this was the time before the internet, before fancy charting services. And Graham would just get this graph paper with an X and Y axis and just plot price and time and price rather. And then every day he would plot the closing prices of live hogs and soybean meal and cocoa and orange juice. And after a couple of weeks, he would see that the bars would be going up or be going down. And he'd say, Mark, I just want to buy a market that's going up and I want to sell a market that's going down. And to, my simple mind, that had a great amount of appeal. And so it was from the early beginnings, where I got introduced to what we call technical trading, where you're trying to make investment decisions exclusively based only on price information. I'm not looking at what Jerome Powell from the Fed is saying. I'm not looking at the inflation numbers. I'm not looking at the consumer price index that will come out this week or the producer price index. I'm just looking at the markets to make, buy and sell decisions. And I'll show you some of the things I've done. So I basically, again, just look at the patterns and the price action in the market. Hopefully, before you signed up for the video, our team, should have sent you a little package with, some basic formations, basic chart patterns. And again, armed with just a half a dozen chart patterns, you can literally make millions of dollars in the markets. And so with that said, I'll basically, take you through some of my trades. Then I'm going to walk you through some live trades that I'm looking at in the market. We'll talk about it. I'll break apart. I'll show you exactly how I overlay my thinking on the markets in real time. And then we can open it up to a chat. So every day, I'll discuss 2 or 3 markets. I'll break it apart and I'll open up to chat. Now, I know you guys will say, well, why don't you look at that and look at that? And, we could look at thousands of charts, but really what I want you to focus on is the markets that I look at, the methodology. So you can basically apply and overlay, this kind of approach to any trading market. So it doesn't matter if you're trading cocoa or natural gas or crude oil or gold or the euro versus the yen. I look at all of those markets on the same way, principally based on price and price action. So with that said, let me kind of just walk you through. Every day I'm very active in my own account. So, I started the pattern trader really to give back, but, at heart, I'm a trader. I've been trading for 4 decades now. I love trading. It gets me up in the morning. It's always new. It's always different. And, people, and it's a very valid, if you, kind of say, well, if this guy's making all this money, then why would he be spending time, doing all of these, webinar series and free things and it's that. And it's really, meeting guys like Prashant, who's been with me 4 or 5 years now and really giving back and being able to give back to other people really gives me much more gratification. I trade the markets anyways. And so I just like to talk about markets. It's my passion. And, but it's a valid, thing. If you harbor, any residue of doubt of, my motives, it's just because really I like to give back. I love doing what I do. And with that said, I'm a very active trader today. It's a very, certainly in the stock market, which I've been very active in, it's a very whipsaw environment. Today, we saw the indexes go way down and then recover by the end of the day. And so I kind of look at markets in terms of energy. So when markets are, really going lower, I look for those things that, I want to buy. So the theory is to buy into weakness and to sell into strength. And today I really bought a lot of call options in Uber, the ticker symbol UBER. This is the rideshare company. I don't really care what a company does. I bought the stock a couple of days. I'm still down a few bucks on the stock. And then I bought a bunch of call options. I actually liquidated. I had over 600 call options at one time. I was making about 50 grand. I liquidated most of them, and I've got 75 of these call options in this account overnight. Of the $41 series, I think Uber closed like $42.60, somewhere in there. So I'm about $1.60 in the money. And then I've also got these 44 call options that I bought last week. So they're still out of the money, as we say. And then I also bought JD call options and they did very well today. And I bought some Dow Jones puts on the close. I think it was a bit of a short covering rally and had the feel of that. So I'll talk you why I kind of did what I did, walk you through a couple of things. But before I do that, I just like to kind of walk you through the history of some of my trades, show you what I was looking at the time, and then what the results were. And again, I was only looking at the price at the time. So to me, price is the news. My whole philosophy is that the market is a discounting mechanism. The market, as you know, is ahead of the news. So, you know, whatever we think is going on now with the pandemic or the Fed or whatever, the market's already digesting it, throwing it away and looking, okay, what is the market going to look like a week from now, 3 weeks from now, 3 months from now? And so whatever you're seeing now, you know, is being discounted. So, you know, people always ask me, do I trade the news? And, you know, if we could trade the news, I just go downstairs to the corner, buy a Wall Street Journal, and we could all get rich that way. But the markets don't work that way. The markets are ahead of the news. The markets are a discounting mechanism. And so I'm going to show you some of my trades and show you how just based on price action, I was able to anticipate. So I'm sorry, that was these are my stock positions today. And then this is what I'm holding in my FX account right now. I've been long the pound New Zealand dollar. I've been shouting from the foothills to get long pound New Zealand dollar to our members for the last month and a half. And I'm up over $200,000 on those positions. I've also got a short position in gold right now. And so this is what I've been saying since, you know, November, actually for a lot longer. But, you know, in November, this was my email that went out November 22nd, where I alerted our members. And this is what the outgoing email looks like every day. So, you know, after these live sessions, if you like this, you know, kind of, you know, service, like this kind of analysis, then you could sign up for what is called our elite service. You know, every day I send out an email to our members, kind of giving them a heads up on what I think is a high probability trade setups where the risk is very small relative to the outcome. And so at the time I was looking at the British pound versus New Zealand dollar trading pair. I'll put the live price up in just a moment, and, you know, suggested they put a buy stop at 192.77. Now, buy stop is a pending order. It requires the market to go through a certain level in order to confirm what I'm looking at. And at the time I said, pound New Zealand has formed a short-term inverted head and shoulders. It should have been a bull price pattern. So that was a typo there. Penetration above today's inside day bar suggests there could be a chance of a healthy move higher from current levels. So that was at 192, and now we're trading 800 pips higher. We're trading at 201 right now, so almost 900 pips since that email went out, and I'm still holding that trade. So, you know, this is what I do very different than any other Forex mentors you see out there or systems that try and, you know, extract 7 pips or 12 pips out of the market. I'm holding a trade with 900 pips, and instead of getting out, I'm actually adding to my positions at current levels. So that was November 22nd, that trade went out. And then just a few days ago, I sent out another trade. You can see here is the email, Wednesday, January 5th, to buy it at 199.61. So I said it at that time, I'm currently long pound New Zealand 192.77, and I'm looking to add to my position. 9 months ago, pound New Zealand formed a double bottom. Recently, this pair formed an inverted head and shoulders bull price pattern, et cetera, et cetera. And then I said, pound New Zealand is banging on the door at the 2000 price level. I says, this time I think it sails through like a knife through butter. And right now we're trading at about 201. So I'll put up the pound New Zealand in a moment. And so right now I've got $214,000 profits in open positions on pound New Zealand dollar on those, you know, on those trade suggestions. So way back last February, about a year ago, this was a trade that I did in the stock Lyft, ticker symbol LYFT. And, you know, again, I was looking at a double bottom, which is a bull price pattern. I suggested we buy to 45.83. Now, this is my live trading account. You know, it's not as neat as Forex accounts, and it doesn't really break apart the buys and sells, but this is where I was buying the stock at about 45, you know, 70. I bought about, I don't know, 7,500 shares and blew them out for a $90,000 profit. Then I was also buying these call options A call option is basically just a very leveraged bet. So a call is a bet that something will go up. A put is something, a bet that it'll go down. And this is something that you either win big or you lose all of your money. So I was buying these things at 92 cents and I blew them out at $7. So I made about over 800% in those trades. And then I bought the $47 call options at the same time at $1.10, blew them out at $6, and collectively, made probably $250,000, on a position that, went a certain way in, over about 10 days or so. And this was about exactly a year ago. I remember being on one of our sessions analyzing the NASDAQ. I surmised that we were going to get a huge break. This was on February 19th. It was on a Friday. I started buying put options, and this is what it looked like. QQs, which is basically an ETF that tracks the NASDAQ. I was betting that those were going to fall. And at the time, the QQQs were trading at about 334 when I put these put options on. So a put, again, is a bet on the market going down. And so I bought way out of the money put options. So it's trading at 334. I bought the 320s, which meant that the market needed about a 7% decline in order for me to make money. And you can see that, I put them on the 19th and they expired 1 week later. So I had to be right now. So I bought these put options for about an average price of $1. You can see that I bought 350, and you need to multiply this times 100 because each put option represents 100 shares. So this was about a $35,000 bet. And if I was wrong, I would have kissed all of that goodbye. But as it turns out, worked out pretty good. I got in at $1 and got out between $6 and $8. So I made between 600 and 800% in about 2 days. So I put this thing on Friday. By the following Tuesday, I made 559% of my $35,000, or $195,000. A week later, I did the same thing. So in the space of 2 weeks, I made quite a bit of money on those put options. This was, I think, my most successful trade last year, which was really counter to what I've been betting. So members who've been following me know that I've been bearish beyond meat. The ticker symbol is BYND since it went over $200. When it was trading at $200, I was telling our members this is going to be a $40 stock. And right now it's trading at about $65. So it went from 200 all the way to 65. But there was an area here where I saw that it was a bit of a trap. And so I actually, recommend to our members to put a buy there at 120. And it ended up going to 150 in 3 days. And I ended up making 7 figures on that bet. So I bought these call options at about $1.55, and they ended up going to 19 or $25 actually. There must be a graphic here that shows. Yeah, so here they went to 19. I bought them at $1.50. They went to about $23. And cumulatively, I made over 7 figures in the stock. Here I bought the stock BYND at no, these were the call options. So you can see the call options were $15.50, and I bought them at about $1.50. And then here's the stock at $139. I bought it at $120, and ended up making just a pile of dough, over 7 figures on that bet in a combination of stock and options. And so this was Moderna. Shorted that, made 300 grand there. And you can see all of the trade. These are all live account. This is not a demo account, I assure you. It's live as a heart attack. This is OCGN, where I was betting on an earnings thing and went straight up and made quite a bit of money there. So, QuantumScape, ticker symbol QS, I was shorting that all last year. From the time the stock was about $80, it's trading at about $20 now. So this was the chart when I started trading it. On one of these webinars, I started shorting it right there. And a number of people who are probably on this webinar remember that. Right at this area when it was at $40, QuantumScape, it was on one of these live sessions. I said, this thing is guaranteed to go down. and it dropped from 40 bucks all the way to $30, following that recommendation. And so again, I just look at patterns. Patterns tell me what the trajectory is. And so, made a bunch of dough there. So this just gives you an idea. Again, I was piling into pound New Zealand. This is a pair that I've been looking at for quite some time and just made a whole bunch of dough. This was a call in gold. I'll also discuss gold. You can see that this was about midway through what was actually January of 2021. So you can see almost a year ago exactly, we were trading at about 1850. And I said that this thing's going to go to about 1700 at the time. And it went to about 1670 on the nose. So I got in at 1867, got on another trade at 1797, got out at 1687, and made a whole bunch of dough there. So I think you kind of get the picture. And so these are past trades, and you say, well, that, you could have made that up or whatever. These are all extracts from live accounts. But, now I'll show you what I'm looking at, on live trades, and I'll show you how I, apply this trading methodology, where it's a combinations of just looking at trends, patterns, and price action. So to me, the pattern precedes the trajectory, meaning that once we see a pattern, then we can understand what is going to follow from the pattern. Sometimes, not so easy. This is a very chaotic market period where actually the indexes are going down, but counterintuitively, I believe the stock of Uber has bottomed. And why I believe that, and you can see I bought, call options into today's sell-off. So when everybody was selling it, in the opening down here, I was, buying these out of the money call options. So when this thing was trading, around 40 and a half, I started, buying the 41 call options for, I don't know what I paid for them. I can look it up, but a lot less than where they're trading now. Let me just, I can actually, I should look that up. But the point is, the reason why I was willing to, bet when the market was falling out of bed, why was I, actively buying the stock and the call options in Uber? So where are these orders? I like to, back up everything I say. I know there's a lot of nonsense out there on the internet. And yeah, so I bought some at 97 cents. And let's see, where's Uber trading right now? These call options are trading. So I bought the 41 call options at 97 cents. So where's the 41s right here? They're trading at $2. So basically double my money. So I bought them at 97 cents and they're trading at $2 right now. So made 100% today, just on a very small move. So you can see that this is not much of a move, but in the options, because of leverage, I'm up 100% on what I paid for them initially, and I'll show you that in a minute. So why did I do that? Why would I do this here? The market's careening lower. This thing looks like it's going lower. Why was I buying this into this lower? And the reason I was buying was that I was looking at this pattern. And again, to me, pattern precedes direction. And so I was betting that the market here has bottomed, that we put on this very basic W double bottom price pattern. And so typically I like to wait for things to confirm, like we saw today where we closed on the high of the day. So to me, this now is starting to confirm a picture that I'm looking at. When you're buying, these options, it's better to buy it when, to buy a call when things are going down and to buy a put when things are going higher. But that's a whole other thing. So now we have a double bottom here. So to me, this is a bull price pattern. So what this says to me is that over time, and I don't know how this is going to unfold, but over time, my expectation is that this thing is going to work its way higher. I mean, it could be a grind for weeks and weeks and weeks, but over time, this thing should start going higher by virtue of this bullish price pattern all the way buried in this. And so, this is where it's very difficult, where the market kind of looks like this. It looks like nothing. But to me, I use the pattern as my guide. And then once I see a pattern, then I wait for a confirmation day. And this is what I call my insurance bar. What I call a key reversal, where you can see earlier today, we went lower. And by the end of the day, we closed right on the high of the day. So that little slash mark to the right. So, if it looks like this, it closed, closer to the high than it did the low. And so the buyers were in control. And so this to me starts representing, an indication or confirmation, or it tells me a way to join this trade where I can understand where to hop in and where my risk is. So, where a trade's going to go and, in what time frame it's going to go, those things are out of our control. What is in our control is, the entry and the risk. And to my mind, if you can understand the risk, then that's what sets you up for great trades. So all of those trades last year where I bought Lyft, when I bought Lyft in January last year, I thought I had like a 50-cent risk to make, $20. And that's exactly what happened. When I bought Beyond Meat at 120, I felt like I had a $2 risk. So I knew that I was getting in at a point where I could understand the risk. The risk was very small and the upside was very, appealing, for lack of a better word. And so what I'm saying, so when I see these bars, I have a 4-step layered plan to get into a trade. So first you see what is the phase or the direction of the market. Now this one, is a little bit difficult because the phase or the direction actually is kind of sideways to lower, right? So if I was going to say to you, what is really kind of the phase or the condition of this market, it's really kind of somewhat lower to sideways. But this is where, I kind of dig into, the patterns here, and this tells me. And so what I think my strategic advantage is getting in markets very early before they turn. And the way I'm able to do that is by just observing the chart, the price patterns, and the price action. And to me, price patterns precede direction. So this is going to tell me where this is going to go. And so, we can't know everything, but these patterns, and this is why I say price is ahead of the news, because this market started bottoming in the height of the pandemic, this is December. So this is when Omicron was, really showing up. It was virulent all over the world. And I never tell my wife to do anything, but, to me, this was like kind of low hanging fruit. And I said, don't argue with me, just buy Uber. And she goes, but it's the heart of the pandemic. How could I be buying it? And that's exactly the logic that most people use when they are approaching their investment. But we don't know in the heart of the pandemic, why this is bottoming. But the market tells it. The market is ahead of the information. 3-6 months from now, when it's up here, we'll say, well, I guess this is how it started out and wasn't so bad, on and on. And so this is a great example of how, you can't buy panic, you can't buy the news. You just got to objectively look at what price is telling you and forget everything else. And sometimes very difficult to do when people are dying and, you got this strain and, planes are being canceled and what have you. How can you buy this ride sharing thing that's really based fundamentally on a reopening trade? But this is a great example of how the market, and, so I told my wife to buy it right here around $38, and now we're at 43, and it'll be at 48 and 58. And so, but if you can get in here at 38 and know your risk is there, that's the definition of, the holy grail of trading, where you can identify areas where your risk is small and your upside is, huge. And so, again, I have a layered plan. If it starts out with identifying a chart pattern, so we see a bullish chart pattern, then I wait for a set of days or a particular day like today, where we have this key reversal, where the market goes lower, closes on the high of the day. So I call this my insurance day bar. And the reason why I call it insurance day bar is because it tells me where to join the trade and where my risk is. So this is my risk, and to me, that's my upside. And so if I can understand, my risk and where to get in, that to me is the closest thing you're going to get to the holy grail of trading. Where this is going to go, how it's going to go, what time frame it's going to get there, those are all the things out of our control. But I know that I can put an entry here. I can put a buy stop. So the way I layered is that if I see something, like I sent out an email today, it should be out to those on my elite. So let me just so this is an example. So this is exactly what went out today, where I said put a buy stop at 42.90, which is just a hair above what the high of the day was. It was like 42.80 or something like that. So I require the market to confirm what I'm looking at. So you can see that, if the market just opens tomorrow and goes straight down, no harm, no foul. My resting order is not triggered, and simply cancel it and go and look for another trade. But by putting a pending order there, now I don't have to watch the market. I don't have to spend 3 hours waiting for some magic crossover between the MACD and the Bollinger Band and what have you. If the market starts lower, and then my pending, I'll just be triggered. I'll be put into a trade, and the market will put me in at the time and price. So this is just a great way to spare your time and have the market put you in when it's ready to go, rather than you try and figure everything out. So it's really a set and forget, where this email goes out, you put your buy stop there, you put your sell stop there, and now you're done. That's it. You go about your day, you go to work, and let the market do the work for you. And so once I see my key reversal, then again, I simply put a buy stop above the high of the day. I put a stop loss below the low of the day. So this represents my risk, which is about $2.60. And I think I could probably take out, if you were willing to stay in this thing, 20, 30 bucks. So, if I told you, you could risk $2.50 to make 20 bucks, that's a 10-to-1 risk reward. That's how you make money in the markets. But, most people are losing money, certainly in the FX, because, I think it's for a variety of reasons, but I think it's principally because they're trading on too short a time frame, and their outcomes are too small. Meaning that if you're trading a 15-minute chart in the FX market and you're trying to extract 7 pips or 10 pips or 15 pips on a trade, which I'm sure many of you are trying to do, and then you try and do that 5 times a day, that's just a losing proposition. That's just going to end up with the money in the broker's pocket. Because if you're trying to make 15 pips, you got to risk 15 pips. Then you got to cover the 2 or 3 pip spread. And so you basically have a 1-to-1 correlation, whereas, whatever you're trying to make, you're also trying to risk. It's like a casino thing where you put your chip down, in the blackjack thing, and you either win a hand or you lose a hand, but they take everything away. And so to me, this is, it's just a question of time before you lose, because you've got a 1-to-1 relationship. You've got to win 90% of your trades. And that's why most people are losing their money. Where what I try and do is I set up a trade where if I'm going to risk 50 pips in the FX market, I need to see that I'm going to make 150 pips. I won't put on a trade unless I can see my path clear to 150 pips. And, you go on our website, a ton of people said, before I met you, I never made 100 pips ever in my life, because most trading strategies are not geared to that. They're just very short term. You got some moving average magic, crossover, and it just doesn't work. So this is, at least a 3-to-1 risk reward, meaning that I'm going to make 3 times what I'm risking. And if you can set up your trades with the 3-to-1 risk reward, you can actually lose 72% of your trades. And that's just math. So, it's not, I could send you 5, trades in a row, all losers. And the 6, will make up for all of those plus. And so at the end of the day, you'll have a system that's lost 5 out of 6 trades. And so if I told you I lose 5 out of 6 trades, you'll go, well, that sounds pretty hopeless. I'm going to go and find the next guy. But, if the 6th trade is this one, where you can, make $20 on this trade, and you've risked, cumulatively, you've lost $7 on 5 other trades, and you've made $20 on one, you can see that that's how you make a lot of money. So it's really not about the number of trades, it's the quality of your winning trades versus the quality of your losing trades. And this is something that most people don't understand. When I started making, managing money, the first thing people would say, so what is your winning percentage? And if I told you my winning percentage was, 88%, you go, wow, that sounds pretty good. I'll go with you. But, that's the con of most of these systems. They show you that they win 80 or 90% of the time. And if you dig in the expectancy, so if you look at all of these, FX systems, and you look at the expectancy, you can see the expectancy is like 3 pips or 5 pips or what have you, which is just a con, because you have to overcome the broker spread, of 2 pips. So if you've got an expectancy of 3 pips and you've got to overcome a 2 pip spread, there's just no way you're going to make money. So that's how these systems are conning you. And so go and look at the expectancy. And expectancy is simply, the outcome, what you're looking for on a given trade. And so in this trade, I'm looking to risk $2.50, and I think you could make 20 bucks on this trade. So that's like a 10-to-1 risk reward. So if you just had 2 of these trades a year, you could make all the money in the world. And so what I look for are great trades. I don't look for thousands of trades. I look for a few great trades. And to me, this has all of the parameters of that, where, if you get in now, I think it's a pretty good, I just like the risk reward. So I bought the stock, I bought the options, I bought call options. I made double my money today on these calls. So I made 100% today on this stock, basically betting that if I think that this, has bottomed, that means that, I'm looking at this sell-off as an opportunity. And so it's a little bit, counterintuitive. I know I'm throwing a lot out there, all at once. I, hope over the next 4 days, we'll talk about enough where it'll sink in. Also, I think what I really want to highlight here is what we're looking at is a bar chart. It's not a candlestick, and it's a clean or a naked chart. And the reason why we call it a naked chart is because you'll notice there is no volume. There are no expert advisors. There are no MACD. There is, no Bollinger Bands. There's no, moving averages. There's nothing on this chart but just price and time. And so what I look at is, I don't know why that showed up. What I look at is just this picture tells me all I need to make. I made 100% today. This is all I need to make a lot of money. So before I go any further, maybe I should just kind of see if there are any questions. So AJ says, when you bought options, did you share your strike and expiration with your followers? I like to trade options rather than stock. So, I'm just looking at the markets as they're moving, so I can't share everything. Typically, I wait for a market to close. Buying options like that, it's a very risky thing, right? So I know what my risk profile is. I don't really, like to throw those trades out. What I like is when something confirms itself, right? So you wait till the end. So this is why it's so important to wait till the end of the day, to wait for the close, because if this closed here instead of up there, that would have a whole different look to me. That would have, it would challenge my assumptions. It would, I wouldn't be doing a trade on that. So the fact that it closed up there, it now tells me that basically what this day tells me is that your risk has been established. So all of your risk has been washed out by today's trade, by, the guys who tried to, sell it today and weren't successful. So you can see that all these short sellers or whatever try to take it lower by the end of the day. So now it tells you where your risk is. So your risk has been established by virtue of today's action. And so, when you get in, it's, that if you put your stop here, you got a pretty good shot of this thing kind of, working in your favor over time. So to me, I wait till it closes. I wait till something confirms itself. I did something in the middle of the market today when you get extreme, price action. When you get extreme price action, and if I'm looking to short something and something's going higher, I'll sell into that. So what I do personally is certain other things. It's extremely risky doing options. This time it worked out. I've lost a whole bunch of times. So I sent out my email at the end of the day telling people to buy Uber. This is where all of the risk has been taken out. And so I do occasionally, we have an early morning session where I do share my option ideas. So Joseph says, how did you make 100% if you bought them? No, I bought the options early in the day. So when the market was careening down here, I bought the $41 calls when the market was trading at like 40.5 for 97 cents. And because it closed up here, the 97-cent calls closed at $2. So I'm making 100% on those call options. So that was the call options. The stock, I'm still losing a bit. I try to buy the stock, up here, and I'm still losing a few dollars on my stock in Uber, but I'm hoping that it'll come back. AJ says, what is the early morning session? It is a daily session, Monday through Thursday. Yes. So Tony says, what option did you buy? So I bought the 41s today and the 44s. So way out of the money. So we call this out of the money, where you can see that it's trading below the strike price. So in order for me to make money, this thing has to go higher. But when you buy far out of the money, these things are very cheap. And if this thing goes higher, then you make a lot of money. So when this thing was trading at $40 today, and I was buying at the $41 calls, I was $1 out of the money at the time. So, it had to go above 41, which it did do for me to now be in the money. So, not going to kind of get into a whole thing. Really, what I want to get across in the first few sessions is just the application, why I'm looking at certain things. Now, this thing is, a little bit difficult because this is actually a downtrending market. And then, we see a pattern and it doesn't look, but this is, like I said, when you get in early, when you see these things before they happen, that's how you make a lot of money. Now, the other trade that I'm very successful in right now, which I started piling in November, the British pound versus the New Zealand dollar. This is, again, it has been a difficult trade, but I've applied the same logic for 5 years in pound versus New Zealand dollar. But having said that, last year was not an easy trade. But again, what I want to get across to you guys is the principle upon which, I look at a market and break it apart and then try and establish risk reward parameters. And it's all about trying to get in a market where you have a small amount of risk for a big outcome. And, sometimes that's not always the case. But sometimes the markets gives you extraordinary opportunities where I got in QuantumScape, last year where I knew like I had $1 risk to make $10, or I got in Beyond Meat for, $2 risk to make $30, or I got in Lyft at, for like what I thought was $1 risk and I made $30. So there are certain times where the markets get into these coils. This is a market that's kind of already on its way. But I still think that, it's a very good risk reward opportunity. although, it's not as definable as it was in some other areas. But again, what I do is, I kind of take, I look at a chart, I open up a chart, and it either speaks to me, and if it doesn't, I just go and look for, something that does. So you can see in this particular, thing, this thing came straight down. This was a downtrend. But, as all, good things in life, trends do end. And when they end, they put on a pattern. And you can see, just like Uber, we have this double bottom. So this is what Uber looks like now. And this is probably what Uber will look like in the future. Because, the pattern tells us that the trajectory from the pattern is going to go higher. How it's going to get there, when these are, not entirely within our control or knowable. But if you can get in at the bottom, you can get these kind of sprints. And this is really what I'm looking for in my trading. I'm looking for, to take pieces out of the middle. So, if I sold short there, or if I bought here, and I want to take, and I see a double bottom here, I want to take a piece of the middle out of these trades, just 3, 4, 800 pip moves. So this is what I'm looking to do. And the way I do that is by ascertaining both the pattern and the price action that precedes the move. So you have a double bottom here, and the double bottom is connected by what we call a neckline. And a neckline is simply a line drawn through the pattern. And when it goes through the neckline, it basically confirms what we're looking at. So sometimes we see patterns all the time, and they don't always confirm themselves, right? They give us these head fakes. So what happens is, typically when things come out of these patterns, they retest the pattern. And when this retested the pattern, it put on, so what was, and this is kind of really badly drawn and what have you. Let me kind of make this a little bit nicer. So here was the pattern, and here was the neckline, which is simply a line drawn through the pattern. And then it retested this thing and made a rounding bottom here. And both of these patterns, the double bottom and the rounding bottom, were conjoined by this resistance line at 180. And so this was late 2016, early 2017. And so what was resistance then became support. So you can see a huge double bottom occurred in this time frame, which then, I started buying this thing, and I got out right here on January, and on Sunday night in the heart of the pandemic, I got out at 211.87 and made just beaucoup amount of money based on the observation that this bottomed here, and if the market's bottom, it's going to go higher. So this has been a very kind of difficult trade, because even since it did bottom, it's just been really, doing a lot of stuff, right? So if you just look at this chart, in this time frame, you'll go, what the hell, is this? And, it looks like a coin flip, and even, bet which way this is going to go. But what tells you which way it's going to go is all the way back in this time frame. And so this was 5 years ago. So what was happening 5 years ago told me exactly what to do here. And so this is the other thing. This is a weekly chart. You can see this is a weekly, which means each one of these bars represents 1 week in time. And this is all the way back to 2016. So most people are trading on a 15-minute chart or an hour chart or a 4-hour chart or what have you. But whatever you're trading on, you cannot see this history. And to me, I love history. I'm an avid, observer of history. If you don't understand history, they always say, history is bound to repeat itself. If you don't know, it's just bound to repeat itself. And so I try and look at as much history as I can to understand the cards I'm holding, because, in here, if you're just looking at even a daily time frame or even a weekly just from here, it's very difficult to see what the hell is going on here. So I need, as big a time frame as I can, a global view, a bird's eye view, to kind of take a look at this thing and see what happened. And so you then can kind of peel back and see, okay, it bottomed here, it put on another bottom there, and then it put on another bottom here. And this is what's called an Eve and Adam double bottom. So an Eve is where you have a number of pokes at the same support area, and an Adam is where you have a single. But whatever you call it, it's a bottom. With the word bottom in it, it means what? This thing's going to go higher. And so simply from this price action, I started loading up in late November, 192, 77, then 196, then 199, then 201. I've been loading up all the way here. Why? Because I think that this thing is going to come out of here like a bat out of hell. So you can see this was the overhead resistance. This is the neckline. And so now we have this, in this time frame, just this, this big base, this double bottom with this neckline. And so it's really just beginning. So people will say, well, you made 900 pips, is it too late to get in? To me, it hasn't even started yet. This thing is going to do this. And I don't think that that's going to be an exaggeration. So I've got 900 pips profit on some of my positions, and I'm still adding to my longs. I'm not booking those profits. So you can say it's, somewhat insane, but this is how I make big money by, betting and taking these extended moves. I could be in a trade for 3 weeks, 3 months. I was in this trade for 1.5 years. And that's how you make a lot of money in the market, by trying to get in and out and time it every few minutes, to take 7 pips here and 10 pips there and 15 pips here, like a squirrel darting out of a tree hunting for nuts. You're just not gonna survive that way. Eventually the trading will eat you alive. You can't overcome the spread. You can't overcome the mistakes. You need to have big wins in order to make up for all of the inevitable losses. So, I'm kind of throwing a lot, but that is basically my philosophy. I look at the patterns, I look at the price action, and that tells me, by and large, where something's going to go. Now, how it's going to get there, it's going to be a week, a month, 6 months. Is it going to go like this or that? I don't know. But I think 6 months from now, it'll be up there. And when we look at it there, we'll go, well, how did we know? And basically, this precedent tells you, where it's going to go. So you guys are asking me to check a lot of trades. We could go into thousands of trades. Really, what I'm trying to impart are the basic principles, and you can overlay these principles on Australian, Canadian, Jeremy, on crude oil, on IBM, on any chart you want to look at. So I'm always probing for these risk reward opportunities where I can get in, where I have a very small risk for a very for a good, and it sometimes it just takes time. This took time to build, but now I think your timing is good because you can get in where a lot of noise, a lot of, the trees have been shaken already. So, look, this thing, has 300 pip, trading ranges. So you got to give it some room, but by and large, I think this thing goes higher. Philip says, that's awesome. You're still in that trade. I can remember when you started it. I'm still in it, and I'm actually adding to it. Every day I kind of add another one. See, Minerva says, will we get a recording? If you don't, you should. If you don't and you want one, just send an email to our support team, support@thepatterntrader.com. Is that right? Yeah. So I'll put that in the chat box. Duncan says, I'm on 4 positions on Pound New Zealand. So good on you, man. I think you'll make money. So James says, when you're patient with your style, do you have to be patient and look at the charts only a few times a week and let it do the work and maybe look at the chart? Yeah, so the idea, James, is to let the markets do the work. The less you're looking at it, the more objective, the more removed you are from it, the better you are. So people say, well, I can't do this because I work for a living. or I do this. Actually, if you work, you're going to do much better, because if you're sitting in front of the screen and you're watching it, there's just no way you'll be in, you'll see it up here, but there'll be 1,000, jiggles, until it gets there. Every hour this thing will give you a fake out, and you'll have a heart attack, and you'll get emotional, and you'll get out. So if you can just put it, set and forget, put your parameters wide. So tomorrow I'm going to talk a little bit about risk management, because people are going to say, well, if I have to put a 300 pip stop loss to stay in this trade, there's no way I could do that. And you're right. If you kept your present position size, you couldn't. But if you reduce your lot size, and I'm going to show you exactly how to do that, then, so people are always intimidated, saying, well, you have a big account, that's why you can make these big trades. Well, that's bollocks, because, whether you have a $50,000 account or a $5,000 account or a $500 account, 1% of $500 is the same as 1% of $5,000 is the same as 1% of 50,000. It's 1%. So it doesn't matter where you start. It's just that you have to reduce your position size and have a bigger objective. And so most people like to have fun and trade. And if that's your thing and you want the action, the bump, the rush, look, pound New Zealand, going up 900, that's a rush. But, if you're trying to get in and out on a 15-minute chart, then, you'll have fun, but you'll be wiped out. It's not my opinion. Just look at the statistics. Certainly in the FX market, it's estimated that 90% of people are losing their money in the first 3 months. I think it's much higher. So Johannes says, I totally agree with that. I did much better in trading when I was working than when I was sitting home. My question is, how can I detach myself from the outcome, which forces me to look at the screen multiple times a day? So just do a set and forget. So, like with Uber, I showed you my trading parameters for, my elite traders. And so this is, what potentially, if you sign up, you get your email from me once a day. You put your trade in, and that's it. Go to work, go and have supper with your family, go for a bike ride, and let the market do its thing. So the way it would work is you put your buy stop here above, the high of today. I like the market to confirm what I'm looking at. You put your stop loss here, and then let the market do its thing. Just, it's going to go up and down, and, instead of watching it for the next 3 hours, trying to find the exact spot where you need to get in on some 5-minute crossover, now you got your pending order in, maybe it opens for the first 3 hours tomorrow, does this, and then all of a sudden it hits you, and now you're in at the perfect entry. You never look back, and now you just let it go. And then every once in a while you update the stop loss, and, people ask me about stop loss and take profit. It's a, non-exact science, right? So I start out with the basic stop loss where if I'm looking for a big trade, if I'm looking for 20 bucks on this trade, I'm not looking to suffocate this thing with a 50-cent stop loss where it hits me and then goes back up, right? So I want to give it some move, birth, it's, $2, room to move, before it goes that way. So I will, by and large, then just keep that stop loss in. So if tomorrow, it starts going back up, people will, immediately bring their stop to break even. Then you get one little, move here before it goes, and then you get taken out again. So if I'm looking for a big move, I like to give it room. And so if it starts moving, I won't even move this. And then if it moves some more, then, maybe I'll move it. And then I'll always set, some kind of arbitrary, what did I set it on today? Take profit 52.77. It's a number that's just picked out of the air. So, the buy stop here was at 42.90. The stop loss was at 40.01, and the take profit was at 52.77. It was just a number that what I'm trying to do now is see if this trade is starting to conform to what I'm looking at. And, tomorrow I'll see, does the thing look like it, wants it? And if it starts going higher, and then I know I'm on the right track, then I know what I'm looking at. I'm not senile, I'm not dementia, that the market's kind of confirming what I'm looking at. And if the market starts confirming that and I got my take profit here, I'm not going to stop it from making me more money. I'll just keep moving it. So, it's a dynamic process depending on the feedback that the market gives me. So I'll always start out with some, take profit well out of the way. I mean, obviously, if it goes up there tomorrow and takes me out, I'll say, thank you for a $15 profit. But I don't expect it, to take me out. I expect to be in this trade for a while. Forget the options. The options, expire on Friday. So, I got to be, pretty circumstantial about that. But, the stock, just let it work. James says, would you say a stop under the previous low high of the last weekly bar is good enough not to worry about your stop getting hit? So yeah, it depends on each trade. So, if we look at the week, today's the first day of the week. So today's low and the weekly low is pretty much going to be the same. So yeah, I would say you could put your stop underneath, the low of today, and it actually is the weekly low as it works out. So this is Uber, UBER. And again, I don't really care what it is or what it does. I just look at risk reward. So it's something that I can see, an entry where it's very close to where the market bottomed. I don't have to risk a lot to see if this thing's going to work. Says there was a big reversal in the NASDAQ today. That's a whole, separate kettle of fish. I'll analyze the stock market. So, sometimes we get these reversals, but I always say you can't trade a reversal in a vacuum, right? So this was a key reversal today. So just because, you can see every time this thing, made a reversal, made a new low, close on the high, it then went to new highs. I don't know that this thing's going to do that. So sometimes we get fake outs, and so now you kind of have to look at the pattern. So I'm kind of thinking that this is the pattern. This is the triple Qs. This is the NASDAQ. So it looks like you have a bit of a double top forming here. You kind of came through the neckline today, and this is what markets do. They come through the neckline. Everyone gets hot and heavy and excited. Then it retests, and then if it comes through here, then it's confirmed. So I don't know. I have the feeling today is just a short covering day. I actually went short the Dow Jones right on the close, which I don't know if that's going to be a good call. It's not confirmed one way or another. It's not the greatest thing. Usually I'll like it, trade where I see a pattern and what have you. So this was the Dow Jones today. And we also had a key reversal. But the question is, is this a reversal that is going to be, followed higher? I don't know. It could, and even if it does, it could kind of get to a double top and then do that. So it's, we're just in this giant, water machine, washing machine right now, where you just get these giant, mishmash. And so you really have to know what you're doing, because in here it's random. The price action is really random. It could do anything, and it is doing anything. And so I look at this reversal, and, typically, reversals like this, they precede big moves. But this, I think, is was a short covering, just felt like short covering today. So I'm kind of thinking that this is still a bit of a head and shoulders in here. We snuck through this neckline, and I actually, right on the close, bought puts, meaning that I'm actually betting into tomorrow we're going to go lower. So even if we open lower, we open 100, 50, 200, I'll take whatever, 20%, 30, 40, 50% on my puts if they give it to me, and get out. So, I kind of just use some of these things strategically, and sometimes I play around, and that's just really gambling. But really what I'm thinking of, and I'm not going to go up and too extended. To me, I think what is going to give me a true insight into certainly the NASDAQ is this little quirky ETF called the IGV. And the IGV is exclusively tech and software, like Salesforce and Microsoft, and it's just only tech. And so tech comprises 50% of the NASDAQ and a good portion of the S&P. And so tech is a very important component of the markets. And to me, this thing has already blinked and said to me that we're probably going to go lower. So you can see the head and shoulders here in the IGV. And then you also have this formation, which you have in gold, which is this ascending broadening. So you have a combination of these two bear patterns. And now even this morning, on my morning session, I said, even this morning, I said, we're probably going to do this, and then we're going to go and do that. I said that at 8:30 this morning. And so, I think that we could still come back to this, whatever, 375 area on the IGV, and then I would unload on the downside. So today might just have a little bit more gas left in the tank. But I think overall, this is very bearish, and you'll be trapped if you try and buy this market. So there's been an ongoing programming that you can buy the dips. The last year and a half, if you just bought the dips in the market, it just went and made new highs. Every time it came off, made new high, came off. Now I think it's the opposite. Now I think you can sell the rallies. So we had a really good rally today. I just sold into it. All right, guys, I'm going to leave you there. I just want to, start with some basic principles. We'll be with each other for the next several days, and I'll keep going over, and hopefully that will reinforce things. So, really thank you for showing up, and I'll see you back tomorrow, 4:30 Eastern Standard Time. Daniel, you're welcome. Tim, Giuseppe, it's going very quickly. I can't read everybody's comments, but same link. It should be the same bat link, the same bat time, so it should work that way. Dwight, thanks a lot. So Dwight's our technician. If you, have any questions, Dwight's also here to help you guys. And tomorrow I'll go over risk management. We'll talk about that a little bit. All right. Thank you very much.
All right, Mark. See you tomorrow.
Thanks, Dwight. Thanks, everybody.